Okay, now we're back at week 10, day 2. Today we're going to look at how to use the 5 consecutive green or red bar stop. This is probably the stop that I use the most. I would say probably one of my most favorites. I don't have a problem with taking money off the table. I don't like giving it back to the market. The idea behind the 5-bar consecutive stop is that the market usually does not have more than 6 to 7 consecutive bars of the same color. We usually see the market pull back after a number of consecutive red or green bars. Remember, the momentum and acceleration determine the price bar's colors, which I'm referring to zones. There are times when we want to use a tight stop, especially in volatile markets. If you're trading a 5-minute S&P chart, you're going to want to use the 5 consecutive bar stop. I would say 95% of the time. So whenever we have 5 consecutive colored bars, we will place a trailing stop after the 5th bar is complete. We will continue to trail the stop up or down until the market takes us out. It does not matter what color the bars turn after you've had your 5 consecutive bars. We will continue to trail the stop until taken out. Let's go ahead and take a look at that on some charts now. First one we're going to look at is the Dow Jones on a 5-minute. And you can see I talk about the Dow a lot. I like to trade it. It's one of my favorites. So that's why sometimes in the office we don't have a lot of time, and hopping in here for about an hour is stress relief for me. So here I've noted using a trailing stop after the 5th red bar, you have been stopped out at the bar circled here. So we started counting from here. Now do remember, a blue bar is a squat bar, and you have to look underneath down at your AO and your AC to see if that's a red bar, because the squats overlay the colors, and that will be the same in super charts or TradeStation, even in Investor's Dream. Squats do take precedence. It's much easier if you look at the AO and the AC than it is for you to figure out volume divided by range from the previous bar. So just keep that in mind. So we started our count. 1, 2, 3, 4, 5. Placed our first stop at the top of this bar. We then moved it down. Once the 6th bar was complete, we placed it at the top of the 5th. After the 7th bar was complete, we then moved our SPY stop to 1 tick above this bar. After the 8th bar, the bottom bar here was complete, we moved our buy stop, protective stop, 1 tick above the high of the 3rd bar. And then you see on the 9th bar this high, we then placed it here, the high of this bar. And then this took that out. So we were stopped out at the very bottom of this move. Couldn't have been better placement. Most of the time, being stopped out with a 5-bar consecutive trailing stop is one of the most profitable places I have seen in the market. Most of the time it will save you, especially like I said in the volatile markets. If you want to be in and out, or you're a scared trader in the beginning and you want to protect your profit, you may use this. As you gain experience, you may decide to hang in there, go with the green line, the red line, and also we're going to discuss later the first signal in the opposite direction. So let's go take a look at some more of the 5-bar consecutive stops. In this case, you'll see we're in. We start counting. I've marked a little line here on the bottom so you can see if you're having a hard time following it up. 1, 2, 3, 4, 5. You have 5 consecutive green bars. So we start here, 3, 4, 5. You've got number 1 is marked. It's our first trailing stop. Then we place a trailing stop at number 2, and you're stopped out here at the bar circled. And again, notice what happens. Pulls right down, goes into the gator's mouth. Now this is a stock chart. This is a daily stock chart actually, but it worked just as well here. This is actually a Pfizer chart. So right now, if we were looking at it today, it would be down in this area. It'd be interesting to see what happens. So we were looking at Pfizer. This was May 5th, I believe. So we'll see what happens in the future. 5-bar consecutive stop. Again, we have another market. This is going to be a natural gas chart on a 30-minute. Notice you start here with the consecutive bars, 2, 3, 4, and 5, and we're stopped out at the very next bar. Market goes sideways into a wave 4. So that was a good place to be. You could have hung in there, and if you'd hung in there, your green line stop, you would have been stopped out here. Now please don't take me wrong. There's many times that a green line stop or a red line stop are better than the 5-bar consecutive. Any stop you choose to place in the market is going to be an executive decision, always. Depends on your belief systems, depends on the situation, how long you've been in a trend, how much money you have, how much money your account has, how many drawdowns you can suffer. There's so many different influences on what you do. But remember, we're here to help you, and our goal is for you to learn how to trade best for you and how to be in tune with the market. Okay, so here we've got another 5-bar consecutive stop. This is a Canadian chart on a 30-minute. And we're going to follow it down. And here you notice I put the saddle point, the AO and both the AC are very close to the 0 line. This point, you followed your trailing stop down, and you see where you're stopped out at the circled bar. So that's not a very bad place to be stopped out. And which you can see, the alligator is starting to change its formation. Instead of being wide open straight down, you're starting to see a turn here. I pay real close attention to the alligator, and you'll notice in time you'll start to be able to recognize its movements, the way it drastically changes or when it's starting to close up. At first, it's going to be a little foreign to you, but that should get easier. We have another 5-bar consecutive stop. This is in the British pound on a daily chart. And you'll notice here's our fractals. You've come down 5 bars and you're exited on the very next one. Change in acceleration. Actually, this market pulled up right after this. I went back and looked at it. But this is how you're going to be using your 5-bar stop. I have one last chart on the 5-bar stop to show you. And in this one, this is a Microsoft. We have a stock chart. And notice the big gap, the gap up. Well, in a gap up like this, we definitely want to protect that. You had your first bar. Here's your fractal up. I know it's a little difficult to see, but I wanted you to see the overall look. This was the day you'd have been long, gapped against you. You'd have been in here, next bar gapped up, and that was actually your 7th green bar. So they have a trailing stop here. We want to protect our profit. There's no reason if the market gives us that kind of profit that we should give it back. So now we're at the end of day 2. We've covered the 5-bar consecutive stop. Monday, we covered the red line and green line stop close only. And remember, the 5-bar trailing stop is a stop. It's not a stop close only. And also keep in mind, as I said earlier, any stop you place is a psychological, or trading is a psychological adventure, I think. Every day is a new game. Every time you look at a chart, it is new. You're playing a new game, and when it's over, it's over. So make sure you're having fun while you're doing it. Try to do the best by yourself. Go with your belief systems, and have fun with the profit tuning trading techniques.